What if I told you that the money in your wallet could turn worthless overnight? While you're working and saving, governments are printing money like there's no tomorrow, silently eroding the value of every dollar you own. But what if there was a new kind of money that couldn't be manipulated, duplicated, or inflated? In this video, you'll discover the truth about fiat money and cryptocurrencies. We'll expose what's really happening in the global economy, why millions are ditching traditional banks, and how you can protect yourself, or be left behind. Stay until the end, because what you're about to learn could change the way you see money forever. We use money every day, to buy, save, and invest. But have you ever stopped to ask, what gives money its value? For decades, fiat currency has ruled the world. But things are shifting, fast. Today, new forms of money like Bitcoin, Ethereum, and stablecoins are gaining momentum. People are beginning to ask, which one is safer? Which one is more trustworthy? Which one will survive the future? In this video, we'll break it all down, with real-world examples, powerful comparisons, and simple explanations, so you can make smarter financial decisions in this new digital age. We're diving into the fundamental differences between fiat currency and cryptocurrency. Many people use these terms interchangeably, but they have distinct characteristics that set them apart. From the way they're created and distributed to their underlying values and uses, we'll explore the key distinctions between fiat and crypto. Whether you're new to the world of cryptocurrency or just looking to deepen your understanding, this video is for you. So, what's the real difference between fiat and cryptocurrency? Let's find out. Fiat money is traditional currency: dollars, euros, yen, pounds. It's not backed by gold or any physical asset. Its value comes from one thing: trust in the government that issues it. For example, a $100 bill isn't valuable because of the paper it's printed on. It's valuable because everyone agrees to accept it as a medium of exchange. That value depends entirely on the strength and stability of the issuing country. If you hold a $100 bill in your hand, it's only worth $100 because everyone in the economy agrees that it's worth that amount. It's a social contract where the value comes from trust. Trust in the US government to regulate the currency and uphold its value. The moment that trust is shaken, the value of fiat money can diminish quickly. Pros of fiat money: stable and strong economies. In countries with strong and stable economies, such as the US, Switzerland, or Germany, fiat currencies are usually stable and trusted by the population. Widely accepted. Fiat currencies are universally accepted, which makes transactions seamless for global trade, travel, and business. Supported by institutions, banks, insurance companies, and regulations back fiat currencies, creating a strong institutional framework that maintains the system's credibility. Cons of fiat money: inflation risk. Governments can print an unlimited amount of money, causing inflation. This can erode the value of savings and earnings. Loss of purchasing power. What $100 buys today may cost $140 next year, meaning the value of your money decreases over time due to inflation. Political manipulation. Governments control interest rates, debt, and money supply, often manipulating the currency for political gain. In Venezuela, inflation reached over 1,000,000% in recent years. The local currency became almost worthless, and people rushed to use US dollars or Bitcoin to protect their savings. When fiat currency fails due to political instability and inflation, many people look for alternatives, often in the form of other currencies or digital assets like cryptocurrencies. What are cryptocurrencies? Cryptocurrencies are digital, decentralized currencies. They don't rely on governments or central banks. Instead, they're built on blockchain technology, a revolutionary technology that records every transaction in a secure and transparent way. Bitcoin was created in 2009, shortly after the 2008 financial crash. It was designed as a response to the broken banking system, offering a decentralized alternative to fiat currency. Bitcoin's supply is limited. Only 21 million Bitcoin will ever be mined. This fixed supply makes Bitcoin resistant to inflation, unlike fiat money, which can be printed at will. The first Bitcoin payment was for 2 pizzas in 2010. At the time, that transaction cost around $40. Today, those Bitcoins would be worth over $600 million. The rise in Bitcoin's value highlights its potential as a store of value over time. What is blockchain and why does it matter? Think of blockchain as a digital ledger, where every page is a block, and every transaction is recorded and verified by thousands of computers. Once verified, the transaction is added permanently to the chain. Let's say you send 1 Bitcoin, BTC, to someone in Germany. That transaction is verified by the network, ensuring that it's legitimate. Once confirmed, it's locked into the blockchain, meaning no one can alter, delete, or fake it. This transparency is one of the core advantages of blockchain. It ensures that the data is secure and permanent, without the need for intermediaries like banks. Benefits of blockchain technology: no middlemen. Blockchain eliminates the need for banks or financial institutions, lowering costs and speeding up transactions. Complete transparency. Because blockchain is decentralized and public, anyone can audit the system and verify the transactions. High security. Blockchain is incredibly resistant to fraud and hacking due to its decentralized nature and encryption methods. Fiat versus crypto, the ultimate comparison. Let's compare fiat money and cryptocurrency in several key areas. Controlled by. Fiat money is controlled by governments and central banks, whereas cryptocurrency is controlled by users through decentralized networks. Inflation risk. Fiat money has high inflation risk, as governments can print more money. Cryptocurrencies, on the other hand, generally have a predefined or limited supply, making them resistant to inflation. Transparency. Fiat currency transactions are typically opaque and controlled by banks. Cryptocurrency transactions are fully transparent on public blockchains. Transaction speed. Fiat money can be slow, especially for cross-border transactions. Cryptocurrency transactions, depending on the network, can be very fast and have lower fees. Privacy. Fiat money offers low privacy, especially with electronic transactions. Cryptocurrency can offer higher privacy, depending on the coin used, e.g., Bitcoin versus Monero. Global accessibility. Fiat money is widely accepted globally, whereas cryptocurrency is globally accessible to anyone with an internet connection. Fiat money is familiar and reliable, but easily manipulated. Cryptocurrencies offer transparency, control, and protection, but come with volatility and adoption challenges. Which one is better for you? It depends on where you live, your financial goals, and how much risk you're willing to take. If you're in the US, Germany, or Switzerland, fiat works well. It's stable and secure. But in countries like Argentina, Nigeria, or Venezuela, where inflation destroys savings, crypto is becoming a financial lifeline. It doesn't have to be either or. You can use fiat for daily expenses while holding crypto as a long-term hedge against inflation and systemic failure. Crypto can be a tool to protect your wealth in the event of a currency collapse, while fiat still serves as the reliable everyday currency. What does the future of money look like? The future won't be purely fiat or purely crypto. It will be a hybrid model. You'll use central bank digital currencies, CBDCs, to pay taxes or receive government benefits. You'll store value in Bitcoin as a form of digital gold. You'll send money globally using stablecoins like USDC or USDT, instantly and with low fees. All from your smartphone. No banks, no delays, no borders. The future of money is digital, decentralized, and far more accessible. The real question is not, will the financial system change? The real question is, will you be ready when it does? Crypto and blockchain are not just hype. They're part of an unstoppable financial evolution. That doesn't mean you should abandon the traditional system, but you must understand it and adapt. If this video helped you understand the future of money, smash the like button, subscribe, and turn on notifications, because we publish weekly content that helps you grow, protect, and multiply your wealth. Share this video with someone who needs to see it before it's too late. Like, subscribe, and watch the next video. We've got more great content coming up.